Hi everyone, welcome to episode 11 of Direct Stock Investing series. As I am shooting today, 19th of March, the war had escalated in Middle East and our Indian stock market had crashed more than 3%. Nifty ended at close to 23,000 levels and we are inching closer to 52-week low. Things are not looking great and uncertainty and unpredictability continue. On that context, I don't know how our market is going to behave in the upcoming days, but I feel we are extremely bearish. Any small kind of news will badly impact our market. Positive news like ceasefire from US and Iran and Israel will definitely lift, but as we stand today, that looks very far. But anyway, coming back to the discussion, let's talk about today's topic. So I thought I covered most of the topics around direct stock investing, and today I thought, what are the factors that moves the stock market? What are the factors that moves a stock, and what are the factors that moves the index? So let's talk about one by one. The first and foremost thing that definitely going to impact the stock price is the quarterly result. I talked about the quarterly results in my previous video, right? How it's going to impact the stock price? If the company is performing well and if the company had published good set of numbers, good set of result, that is a positive news for the stock and investors are impressed by the performance of the company, and definitely more and more investors are ready to invest into that particular company. Good quarterly result definitely lift the sentiment of the stock, and on the other hand, bad results will definitely impact the stock price in a negative way, right? Investors won't like the performance of the company, and definitely people will sell the stocks. When I say people, it not necessarily mean retail investors. There are a lot of people who invest mutual funds or uh, foreign institutions and all sort of investors, right? So that is the first and foremost point, which is the quarterly results. Second point that impacts the stock price is basically two things. One is inflation and the interest rate. Both of them are interrelated, right? How inflation and interest rates are related? If inflation is picking up in the economy, the central bank will try to curtail inflation by increasing the interest rate. I'm talking about the RBI, right? So when inflation goes up, which is not good for the economy, the we don't want free money flow that's coming into the economy. So we want to restrict the money flow. How can we restrict that? By increasing the interest rate. So if the central bank increases the interest rate, the other nationalized and private banks also will increase the interest rates. So the loans, the interest for the loan, house loan, car loan, personal loan, all the loans will become expensive. When I say expensive, it becomes the interest rate will be more compared to the previous time. So less people will take loans and the money flow will be reduced. Basically, the economy will find it little hard to have that seamless transaction. So when inflation data comes and if the inflation is high, naturally investors will know that RBI is going to raise the interest rates. So if the interest rates goes up, like I said, the the loans will become expensive, which is definitely not good for the company. If some company is trying to have some capex and they are planning to take some loan, if the loan is expensive, they may push that decision to maybe 1 or 2 quarters, right? So it's not good for the company. That means it's not good for the stock market also. The stock movement, it will be affected. The stock move will be affected. If inflation goes up, central banks try to increase the interest rates. If interest rate goes up, loans will become expensive. Companies can't take loan cheaply. Their capex will be affected. If their capex is affected, their growth will be affected, their revenue will be affected, their bottom line, which is profit after tax, will be affected. Directly, it will affect the stock price as well, right? So that is the chain of actions, how it's going to impact the stock market. Now the third point is the GDP number, the GDP data of India. So we publish GDP data every quarter. If the GDP data is very good, that means that our economy is doing well, that means the companies are doing good, means more and more purchases are happening between customers and the company. Definitely, if the economy is thriving, it's definitely good for the companies, and if the company is doing well, it's good for the stock, right? It will definitely reflect in the stock price today or tomorrow. So good GDP number will definitely impact the stock price positively, and on the other hand, bad GDP number, if the economy is not doing great, it will have negative impact on the stock price. So the correlations, you can't say like, I'm talking from a broader sense, right? Don't take it in that literal sense, in the sense that every stock will go down if the GDP data goes down. Not like that. I'm talking from a broader lens. And the fourth point that will have a big impact is the union budget. I know that union budget only happens once in a year, but the 1 month before the union budget, things will be little tricky. Market anticipate few things, and they will price in few things that the budget is going to announce. So the sectors, the market will have certain expectations, and the sectors that are going to be benefited from the budget will give some rally. The stocks from that particular sector will give some rally before the budget, and if it actually comes out, that thesis is correct. But otherwise, if market has certain expectation from the budget, and if that doesn't come out, then after the budget or during the budget, there is a big chance that the stocks or the sector may crash. One example that I can quote in the recent times is the tobacco tax, right? ITC is one company that does business primarily on tobacco products, cigarettes, and recently government had announced an increase in tobacco tax, GST for tobacco, and ITC stock price had crashed from 400 to 350 to now it's trading around 300. That actually happened in the budget also. In the previous years also, whenever in budget, when the tobacco tax is raised, it had affected all the companies that do business in the tobacco sector, right? ITC, Godfrey Phillips, VST Industries. There are a lot of 3-4 companies that do business in tobacco sector, right? So likewise, budget will have huge impact, particularly on certain sectors, depending upon the announcements that comes on the budget. So these are the 4 points that will have direct or partially direct impact on the stock price. So if you know all these points, right, you can play the game pretty safely. You can play the bets according to the events that can happen in future. Say for example, the interest rates decision, RBI's monetary policy, will happen once in 2 months. Last meeting happened on February, next will happen on May, April. Like that, once in 2 months, the monetary policy meeting will occur. Likewise, inflation data comes every month, GDP data will come every quarter, budget will come once in a year, quarterly results will come every quarter. So all these points, if you are aware of this and if you want to invest into some stocks, you can have some strategic bets by understanding the cycles, how it's going to play out. So right now we are in a stage where inflation is relatively low and the RBI is cutting down the interest rates. So we are in that cycle where the interest rates are going down, loans are getting cheaper, right? So it will help you to take better decision while purchasing a stock. Hope you are clear what I spoke in today's video, right? And yeah, that's what pretty much I want to talk in today's video. So like every time, if I see markets, it's completely uncertain. You know, last 3 days, Monday, Tuesday, Wednesday, we had three back-to-back green candles in Nifty, and especially yesterday, IT stock had given a good rally, and I thought market was gaining some strength, but the all 3 days green candles were destroyed in just today's red candle. One candle had destroyed all the gains, and we even closed below of the Monday opening. So things are getting nasty. Today Nifty opened 500 or 600 points down in the opening itself. So pretty bad. I mean, the market is going through very rough time. So I don't know. I mean, unless and until if you don't see any improvement in the Middle East region, things are going to be extremely difficult for stock market and like in general to the world, right? I mean, our geopolitics is going to have, I mean, we'll have a lot of issues. Even Brent crude touched $120 per barrel, which is not at all a good thing for Indian economy. Petrol price can go up. LPG shortage is already there. So let's see. It's wait and watch uh, for all of us, right? Yeah, I thought, I mean, yeah, that's the update I have regarding the current market. Hope you liked this video. If you're liking my content, do subscribe to this channel. I will be coming up with more and more videos. Direct stock investing series is almost done. I will see if there is anything needs to be talked about. Otherwise, I have a lot of content that I want to discuss, I want to share here. Wait for that. If you have any questions or doubts, please comment below. I'm more than happy to discuss that and solve that. So yeah, I will come up with another video. Until then, take care.